Have you ever wondered how to become a millionaire by investing smartly? Well, you're not alone. The path to financial independence is paved with smart decisions and strategic investments. It's about understanding that money, just like a seed, needs the right conditions to grow. Investing isn't just about making money, it's about making your money work for you. It's about taking charge of your financial future and not leaving it to chance. And while the prospect of becoming a millionaire might seem like a distant dream, it's more attainable than you might think. Smart investing is about being informed, being patient, and being consistent. It's about understanding the market, knowing where to put your money, and letting it grow over time. It's not a get-rich-quick scheme, it's a long-term strategy for financial success. And remember, the journey of 1,000 miles begins with a single step. Investing smartly is the key to achieving your financial goals and becoming a millionaire. Before diving into the world of investing, it's crucial to understand the basics. Let's start with the concept of risk and reward. In the realm of investing, this is a fundamental principle. Simply put, risk refers to the possibility of an investment's actual return differing from the expected return, including the potential for losing some or all of the original investment. Reward, on the other hand, speaks to the potential profit that an investment can yield. It's important to remember that higher risk can lead to higher rewards, but they can also lead to bigger losses. As an investor, you need to find a balance between the two that suits your investment goals and risk tolerance. Next, we have diversification. This is the practice of spreading your investments around to reduce risk. Instead of putting all your eggs in one basket, diversification encourages you to invest in different assets. This could mean investing in different industries, different types of securities, or even different countries. The goal here is to offset any losses in one area with gains in another. Diversification is a crucial aspect of smart investing, as it can help to protect your investments from market volatility and reduce potential losses. Finally, we need to talk about the importance of time in investing. Time can be an investor's best friend. The longer you keep your money invested, the more potential it has to grow. This is mainly due to the power of compounding, where the returns on your investment are reinvested and begin to earn returns themselves. In other words, time can turn your money into more money. Patience in this case can indeed be a virtue. Understanding these essential concepts is the first step towards becoming a smart investor. They form the foundation of any successful investment strategy, and by grasping these basics, you're setting yourself up for a potentially lucrative journey in the world of investing. So remember, balance your risk and reward, diversify your investments, and give your money time to grow. Understanding these essential concepts is the first step towards becoming a smart investor. A solid financial plan is the foundation of smart investing. Now let's talk about building that foundation. Picture a financial plan as a detailed map of your financial future. It's not just about where you want to go, but also about how you're going to get there. It's about setting goals, planning your budget, and saving. Setting financial goals is the first step in creating a financial plan. Whether you aspire to buy a house, start a business, or simply retire comfortably, these goals will act as your financial North Star, guiding your investment decisions. Remember, these goals aren't set in stone. They are dynamic, evolving with your life and circumstances. Next, let's talk about budgeting. It's all about controlling your financial inflows and outflows. It's about understanding where your money comes from and where it goes. This knowledge is power, and with it, you can adjust your spending habits, save more, and invest wisely. Now on to saving, the cornerstone of any financial plan. It's a simple, yet powerful concept. By setting aside a portion of your income regularly, you can build a financial cushion that can help you navigate through life's ups and downs. But the real magic happens when you start investing these savings. That's when your money starts working for you, creating a snowball effect that can grow your wealth exponentially over time. A financial plan is like a compass. It helps you stay on the right path, guiding your investment decisions. It helps you avoid getting swayed by market trends and stick to your strategy. It enables you to make informed decisions, balancing your risk and reward. So how does a financial plan pave the way to millionaire status? By providing structure to your financial journey, by helping you make prudent investment decisions, by enabling you to build and grow your wealth systematically. Remember, becoming a millionaire isn't about luck or quick wins. It's about discipline, planning, and making your money work for you. And a solid financial plan is the first step in that journey. A well-thought-out financial plan can pave the way to millionaire status. Choosing the right investments is a critical part of smart investing. This stage of the journey is like setting sail on a vast ocean with a myriad of potential paths and destinations. Let's start with the basics. There are several types of investments you could consider. Stocks, for instance, are shares of a company's profits and assets. When you buy stocks, you're essentially buying a piece of a company. On the other hand, bonds are loans that you give to a company or government in exchange for periodic interest payments plus the return of the loan amount at the end of the bond's term. They are generally considered less risky than stocks. Then there are mutual funds, which pool money from multiple investors to invest in a diversified portfolio of stocks, bonds, or other assets. Mutual funds allow you to invest in a broad range of assets without having to buy each one individually. And let's not forget real estate, a tangible asset that can provide both income and potential appreciation. Owning property can be a great way to diversify your investment portfolio. But here's the thing, no investment is a surefire winner. Every investment carries some level of risk, and it's crucial to conduct thorough research and understand these risks before making a decision. Consider factors like the investment's historical performance, the stability of the industry, and the competence of the management team. And this brings us to another key principle of smart investing: diversification. It's the classic wisdom of not putting all your eggs in one basket. By spreading your investments across a variety of assets, you can minimize risk and create a balanced portfolio that can weather market fluctuations. Remember, investing is not about making quick bucks, it's about making informed decisions, managing risks, and growing your wealth steadily over time. The right investments won't just generate income, they'll build the foundation for your financial future. Choosing the right investments can significantly increase your chances of becoming a millionaire. It's like planting the seeds for a lush, fruitful garden. With patience, care, and a bit of luck, these seeds can grow into a bountiful harvest. Consistency and patience are the keys to successful investing. In the world of investing, it's not always about the big, quick wins. More often than not, it's about the small, consistent actions that compound over time. This is where the magic of compound interest comes into play. A term often referred to as the eighth wonder of the world, compound interest is the process where the interest you earn on your investments begins to earn interest itself. It's a snowball effect that can lead to exponential growth, given enough time. Now you might be wondering, why is consistency so important? Well, imagine you're planting a tree. You wouldn't just water it once and expect it to grow, would you? Similarly with investing, it's not just about making a one-time deposit and expecting it to multiply overnight. It's about consistently adding to your investments, watering your financial tree, so to speak, and giving it the nutrients it needs to grow and flourish. But here's the catch. You need to be patient. Just as a tree doesn't grow overnight, your investments won't either. Patience in investing is about understanding that building wealth is a marathon, not a sprint. It's about realizing that the market will have its ups and downs, but over the long term, it has historically trended upwards. So when you see your investments experiencing a temporary drop, don't panic and pull out. That's where the patience comes in. Hold your ground, stay the course, and give your investments the time they need to recover and grow. This isn't to say that patience means doing nothing. On the contrary, it means being disciplined, regularly reviewing your investments and adjusting your strategy as needed while resisting the urge to make impulsive decisions based on short-term market fluctuations. And so, in the grand scheme of things, it's not about trying to time the market or finding the next big thing. It's about consistent investing and having the patience to let your investments do their work. Remember, Rome wasn't built in a day, and neither will your investment portfolio be. Consistency and patience can turn your investment dreams into reality. Smart investing is not just about picking the right investments, but also about understanding the basics, planning, and being consistent and patient. Let's take a quick trip down memory lane and recap the central points we've discussed. Remember, the foundation of smart investing lies in comprehending the basics. It's about knowing your assets from your liabilities, your stocks from your bonds. From there, we move on to creating a financial plan. It's your roadmap to success, outlining your financial goals and the steps to achieve them. Next, we delve into the art of choosing the right investments. No, it's not about jumping on the latest trend, but about making informed decisions that align with your financial goals and risk tolerance. And finally, we stressed the importance of consistency and patience. Rome wasn't built in a day, and neither will your fortune be. It's a steady journey that requires determination and patience. So are you ready to embark on your journey to becoming a millionaire through smart investing?